Okay, welcome back everyone. Just a quick sound check, and let's see if audio is coming through okay. So we got requests for dollar Canadian, sterling yen, yens, and then gold. Okay, just waiting for the stream, and so I can do a quick sound check. Okay, sound seems to be good. Just before we begin, just a quick general advice and risk warning disclaimer. Note that any advice given is deemed to be of general nature, as the information or advice given does not take into account your particular objectives, financial situation, or needs. Therefore, at all times, you should consider the appropriateness of the advice before you act further. CFD and Forex are leveraged products and thus carry a high level of risk and are not suitable for everyone. You can lose more than your initial deposit, so you should ensure CFD and Forex trading meets your investment objectives. Strategies and charts used in this presentation are for example only. You are reminded that past performance is not indicative of future performance. Okay, so it's been a very interesting week. A good run for those that trade yen crosses. Okay, so I think there's going to be a lot of requests about yen crosses. That's a given. I'm going to talk about all the yen crosses. I'm going to talk a little bit about the dollar strength, and then we'll talk about gold. Okay, hi Miss Mary. Okay, so we'll kick it off. Before we start everything else, I just want to talk about the dollar index here for a minute. I know I've been putting up dollar index on the Outlook every week. For a very particularly good reason. Okay, it's kind of stuck. It's like there's a high probability this could bounce up higher, but it's being capped right now, and we are at pretty much in the past 2 weeks we are at that key resistance around 102.50. Now, momentum does suggest the potential for this one to break above that 102.50, potentially back to 103 or even higher than 103. But we're not seeing that just yet. One of the few good reasons is that we have that ECB meeting this week. And there are talks in the market about a potential 75 basis points hike by September. So if we do the maths, it's going to be July, August, and then September. 25 basis points in July, 25 in August, and then another 25 in September. That's basically what the market is pricing in right now. Okay, it's all very speculative for me. I would much prefer to just wait for what ECB has to say tomorrow. I'm just on that camp where I don't think ECB is they're likely going to move to hiking rates in that capacity as soon as possible, as soon as they stop their asset purchases. I don't think that's going to work that way. Okay, but again, we do have a lot of surprises this week. We've got the RBA surprise, 50 basis points yesterday. So yeah, in all fairness, let's see what happened tomorrow during the ECB. But right now, the dollar index is definitely going to be the focus. Not the focus. It's more like a supplementary material for you when you want to look at your trading or whatever pairs that has anything to do with US dollar. Dollar strength is there. Okay, we are admitting dollar strength is there. It's been there the past week or so, but right now it's facing a little bit of a resistance at around 102.50 on the index, and that's going to cap for the progress potentially intraday today. Okay, so next up with the dollar index, I'm going to talk about the dollar Canadian first. There's a request, I believe it was from Gregorius on dollar Canadian. So what do we look at in terms of dollar Canadian? Obviously, we are looking at a transition below the Ichimoku cloud for the dollar Canadian, but there's one key level to watch out for, and that is 1.25. I'm just going to label that here, 1.25. That will be your key intraday, key intra-week support for dollar Canadian. Now, zooming into the hourly time frame, take a look at this one. I'm going to zoom out a little bit, and you can see the progress with the whole dollar Canadian right now is that dollar is actually losing strength against the Canadian. this point in time. Now, in terms of potential movement to the downside, I think it's fair to look at this one, that we do have two support levels here. One is actually at 1.2525, 1.2525. The other one is 1.25. So I'm guessing, if you're asking me about dollar Canadian, or wanting me to take a look at dollar Canadian, I would assume that you do have a short position. What do you want to do with this short position? You basically have two support. That's at 1.2525. The other one's at 1.25. Now, momentum does suggest if this one breaks below 1.2525 on the hourly time frame, then we're likely going to be looking at 1.25. Now, I just want you to be mindful about 1.25, which we're going to take a look at the pound later on. But you guys that follows the sterling or the cable, you know how strong that 1.25 level is, and that's going to function the same way in terms of the dollar Canadian. So dollar Canadian, what we're looking at here, I much prefer to just hold off from going long, okay, on dollar Canadian until we are very sure that price is going to bounce off 1.25. It's just that it's not the scenario here yet. Momentum on the hourly time frame does suggest that we might be able to see another retest of 1.2525. Break that, then we are likely going to be looking at a move towards 1.25. Now, we haven't touched 1.25 yet on the dollar Canadian for a very long time. So is dollar Canadian going to go to 1.25? Unknown right now. I do want to focus more on that 1.2525, and again, it's only 25 pips in terms of range. What I'm trying to say is, if you're short dollar Canadian, don't be greedy and try to get that extra 25 pips. That we haven't seen that support in a very long time. So yeah, if it just keeps bouncing off 1.2525, then be mindful. If you have a short position, then be very careful, because it's actually very close to 1.25. So we would consider any bounce between the region of 1.25 and 1.2525 as a bounce off key support levels for dollar Canadian. Okay, so yeah, we got dollar Canadian, and next up, there's a question: if euro got driven by sentiment that ECB will likely to increase interest rate, then what drives the pound? The pound is actually a little bit unique. It's more of a political thing, and that's one of the main reason why the pound has been having a hard time pushing above that 1.25 level. I don't see any indication at all, or anything at all, that suggests that the pound is attempting to move higher at this point in time. I think there's a lot of political instability going on right now. There was that vote of no confidence that Boris Johnson just get by narrowly 2 days ago. I believe there's going to be a by-election coming up in about 2 weeks' time. So it's not really done yet in terms of the whole political situation there in the UK. Last week, Platinum Jubilee and stuff like that. Sure, you got liquidity sucked out of it, volatility sucked out of it. Taking a look at the pound USD right now, definitely really want to focus on that 1.25, because if you take a look at it, if I zoom in and you take a look at the pound USD in terms of where it is when it broke above 1.25, or the whole struggle around 1.25, you can trace that back all the way to April. Okay, so we are second week of June, so it's been going on for about a month now. So 1.25 is definitely still going to be playing a huge role in terms of how strongly the pound USD is actually going to pivot around that 1.25. I don't really see any divergences or any signs of anything strong enough to say that the pound is actually in an uptrend. We just don't have that scenario yet. There's a different outlook on the sterling yen and stuff like that. No, actually, sterling yen is actually a very good example, because I'm going to talk about the sterling yen next, and then I'm going to compare it to the euro yen, the dollar yen, the Aussie yen, whatever. But the pound is actually the sterling itself is actually lacking strength or lacking any momentum to push higher. Now stochastics now has just crossed prices above the Ichimoku cloud on the hourly time frame. But if you take a look at this one, it's choppy. It's really in a sideways market condition. I can zoom out here and you take a look at the whole month of June. We don't have to go back to May. Just take a look at June. We got, well, 8 days right now. Taking a look at June, we just see price keep bouncing off 1.25. If you had bought on that 1.25 level, it's not really progressing any higher. It's actually trapped within 100 pips range to the upside. So if we take a look at this one, we literally have 1.26. Beyond 1.26, we've got 1.2675. So is it ideal if you want to be doing some swing trading on cable? Not ideal. This is sideways market condition that we're looking at, and I think if we go by the range, yeah, I mean, you want to trade this as an intraday thing, by all means, I think you can do that. So for example, on this one, if you want to go long, you can have your stop loss at 1.2513, but taking a look at this one, you can, ideally you want to place it at 1.25. Now, in terms of target, yeah, you just go for 1.26. That's going to give you a risk reward that's closer to 1-to-1. But if you take a look at the whole movement in the past week, or basically the whole month of June, it just doesn't stop at 1.25. It actually slides even further. Now, taking a look on this one here, right? This was just yesterday. It pushes all the way down to 1.2440, 1.2430. So yeah, 20 pips below 1.25. Sorry, no, not 20 pips. About 50, 60 pips to the downside. That's the extended range on the pound USD. So I'm not going to be able to say, sure, you know what, place your stop losses at 1.25, you'll be fine. It doesn't work that way. It's not like this is zero. It's not like this is 71.50 on Aussie USD. It just doesn't work that way. What we're looking at in terms of pound right now is that we are probably going to be looking at market acting like that, just around the 1.25. So be mindful if you are trading sterling. You might want to go down to a smaller time frame. You might want to aim less than the range itself. Just be mindful of this one. So you could be looking at the 15-minute time frame and taking a look at this one. Should you go long? Well, maybe you should go long if this one breaks above the Ichimoku cloud. But at this point in time, it doesn't work that way. It's not about the Ichimoku cloud. If you take a look at the momentum, this could potentially be building up into more of a hidden bearish divergence, although there's no significant downtrend to classify that. But again, momentum is building up, price is pushing up higher. Momentum is pushing up higher, price doesn't really push higher than the momentum itself. So I would be very mindful if you are planning to trade cable. I think there's a lot of instability in the cable right now, and in terms of choices on what pairs to look at, there's a lot of other choices. Now, let me bring you to sterling yen, and you can see what's going on with sterling yen here. I'll show you the daily. Okay, we've gone past the extensions. I'm gonna get rid of a few lines. I really want you to focus on 168 and 169 right now. I'm gonna leave 164, 162 should be taken off. I'll leave this one here, it doesn't bug me. Okay, so this is the daily on the sterling yen. What we're looking at here is that there's a potential cap around 168.50. I'm gonna make a little bit of an allowance in terms of range movement. I'll say, you know what, we're taking a look at resistance around 168.50 to 169. Okay, but be mindful. I know the overall tone is that we're looking at yen weakness here, but on the early time frame, it's a little bit overextended. When we go through the euro yen and the dollar yen, you'll pick it up. But right now, just be mindful of 168 to 168.50. Um, Actually, you know what? It's all the way to 169. I'm just trying to limit the range intraday wise. So you guys, you know, you guys can look at a smaller resistance target on the selling end, but be mindful of this one. If it does break above 168.50, then sure, you know what, it'll track to 169. Now, those that ask me about the sterling yen probably have a long position with sterling yen. I see no harm in letting those positions run. I just don't see any sign of this being overbought yet. You know, if it does fail at 168.50, then yeah. But if it does break above 168.50, it will just run off to 169. That's a lot of stop line up at 168.50. So be mindful with this one. If you're planning to go long sterling yen right now, make sure your stop losses are not too far away. I think the max stop loss that you would want to have is around 167.50. But this is more of an ideal scenario if you already have a position in sterling yen. If you do have a position in sterling yen, then I would much prefer a scenario where I'm adjusting my stop losses to lock in my profits. That would be my preferred scenario. But again, stop losses are going to work the same way. If you're planning to have a new position, I really want to have it around 167.40 at best. You know, that's really pushing it. In terms of target, yeah, go for 169. That's fine. You know, you can take some out at 168.50, scale it out. If it hits 168.50, then move your stop loss to 168. So if it does move to 168.50, you need to adjust your stop loss to 168. That's going to minimize your risk. But right now, as of right now, stop losses are slightly below 167.40, around 167.40, 167.41. Okay, so I will leave this here just in case if you guys need it. But yeah, the stop loss adjustment is going to work the same way if you have a running position or if you're planning to go in long right now on the sterling yen. I know I did mention that, you know, in terms of sterling strength, we're just not seeing that yet. But again, the whole scenario with the whole Bank of Japan and Japan's Ministry of Finance is that they are okay with weaker yen. You know, it's beneficial for them as long as corporations that benefits from a weaker yen is able to increase the wage or the salary. I think that's critical, and as long as they're fine with that, as long as they're still coping with inflation in Japan, Bank of Japan's not going to do anything, and the whole world is basically just against them at this point in time. Everyone is hawkish. Everyone is just joining the 50 basis point gang. Bank of Japan is just not doing anything. They're just going to have a very relaxed monetary policy going on there, and you know, I don't think they're just going to intervene out of the blue without any warning. Okay, so Japanese yen weakness, not that noticeable on the sterling yen, really. But if you start going into the euro yen, then you'll see it. Okay, I'm gonna zoom out a little bit. This is a weekly fib that I have. Take a look at this one. This is on the daily. The past 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So the past 2 weeks, it has run up from 135 or 136 all the way up here to 144 right now. Okay, so that's a lot. That's a lot of pips, right? And one of the few key drivers that's driving the market crazy is that there's that consensus of the 75 basis points hike by ECB by September. So 25 in July, 25 in August, 25 in September. That's basically what's driving the market. Now, if I zoom out a little bit more, okay, what we're looking at is, you know, we're looking at a potential 2015 as a resistance. That's about 7 years of potential new high right now that we have. on the euro yen. Okay, the next step for the euro yen in terms of resistance would come in at around 146. That's way above 161.8 by about 200 pips or 150 pips. 146, 148. So there's a lot of room to go for euro yen. So how do we tackle euro yen right now? It's just going up like crazy. Momentum wise, it's staying above 80. I just don't see any signs of divergences or anything like that. This is really hard to trade, right? The only thing you can do with this one is that you want to see a scenario like this where it kind of flatten out a little bit. Okay. Any short-term sideways correction within one day like that, like what happened yesterday, that's your cue for the euro yen going forward, at least for this week. Okay, so if the market goes flat, then you can kind of draw a range for a potential breakout that you can box out here. Right now, it's actually really hard to do a breakout on the hourly time frame, but if you do want to do, you want to trade a breakout on the 50 minutes, it's really hard. But I can give you one level right now, and that's a psychological level, and that's a whole number as well as 144 yen. Okay, now in terms of targets and whatever not, trading the euro yen is actually a little bit easier. You can go by 50 pips range in terms of target. So if you go long on the break on the hourly above 144, then you can go for 144.50, 145, 145.50, 146. Now 146 is what we're waiting for. That's the 7-year high on the euro yen. Now, what's difficult with this one is placing your stop loss, because right now, whatever trade that you have, if you have a long position, great. If you picked it up at 141, great. But if you picked it up above 142, then wherever you jump in, your stop loss is going to be pretty wide. You're looking at around 250 pips of stop losses. If you are aiming for that 146, that's still not going to give you a good risk to reward ratio. So that's why this right here, you want to wait for a market to create a scenario where it actually flattens out like this, like yesterday. If it flattens out for, a good 1 day or half a day, you can kind of get a new range to play with. You have your new stop losses, all sort of stuff, right? You have a new breakout level. It's much more ideal if you're planning on jumping on the yen train. Okay. Right now, what I'm trying to say is that you can go long. I'm not saying that the whole momentum to the upside it's wrong. I think the world is looking at this. The world is comparing all the central banks right now, and they say like Bank of Japan is not doing anything. They're not really cutting off asset purchases. They've got the unlimited bond purchases at 0.25%, JGB yield. All the other central banks are hiking interest rate at 25 basis points. Most of them are joining the 50 basis point gangs. So yeah, just wait for, if you're patient, it's not going to go anywhere. Okay. I'm just telling you the risk right now. If you do want to jump in, your risk right now is around 250 pips. Until it normalizes or it flattens out like this, you're not going to be able to adjust your stop losses. Ideally, if this one comes back to around 143, bounces off a little bit around 143 like so, and then breaks 144, that's a much more ideal scenario. That's when you can move your stop loss. And even if it does bounces off this, just be mindful, your minimum stop loss is still going to be 100 pips, okay? So yeah, those are your options. Right now, your stop losses are going to be around 250 pips on the euro yen. Okay. Next up, I want to talk about the dollar yen. This one really needs your attention. The dollar yen, I know in terms of range and stuff like that, we're not really that far from 130, but let me zoom out. I'll go to the monthly. And I you know what? I'm not going to be able to find that high on the chart. Okay. This chart only goes back to 2003. Right now, where we are right now is actually 2002 high. So we are at a 20 years high for the dollar yen. Now this has a lot of significance behind it. If you take a look at this one, this is really pushing that 161.8 on the daily. So I think this is quite done. If you're trading the dollar yen, you might want to plan your exit. Okay, or you can move your stop losses to 134. Let this run. Potentially, it could go higher. It could go 134.50. But you definitely want to lock everything at 134 right now and be happy with it. I think it's done a good run on the dollar yen here. Okay, now one of the few reasons why I'm really cautious with the whole dollar situation is that I was taking a look at the dollar CAD just now. Someone requested it. I'll take a look at the dollar CAD, very close to key psychological support level. Pound USD still at that key psychological level. The dollar index is stuck at 102.50, right? Gold is not going anywhere. We haven't taken a look at gold, but I'm going to tell you, gold, oil, commodities are not interesting right now. I think the one that's really interesting right now are the yen crosses. Okay, so dollar yen, unfortunately, I don't think we have a really good entry today on the dollar yen. It's just really pushing up too high. If you do have a long position, adjust it, set your stop loss to 134, lock it in, whatever. Okay, 134, I think it's enough. I mean, if you take a look at the whole week, it has jumped up about 150 pips to the upside. I think it's more than enough. When we talk about the dollar yen, when they move more than 100 pips a day, that's not the typical range for the dollar Japanese yen. So I think this one is overextended. Taking a look at this one, we are above 134, really pushing it right now. We might have a limit at 134.50, but I don't think it's a good time to jump in on the dollar yen. I can bring up the pivots right now, and for comparison, take a look at the pivots. We are at resistance 3. This is on the dollar yen. Now, if we take a look at the sterling yen, for example, it's just around resistance 2, right? The dollar yen has reached resistance 3, sterling yen resistance 2, the euro yen, that's way past resistance 3 anyway, so it's beyond that. But taking a look at the Aussie yen, we're still hovering just above resistance 1. Okay, so euro yen, dollar yen, just be mindful of this too. This one had already had a good run. If you're planning to jump in, be mindful. Your risk is going to be huge. We had 250 pips risk on the euro yen. If you want to go long the dollar yen right now, your risk it's going to be around 190 to 200 pips. Is it worth it? Probably not. I would just say, for euro yen and dollar yen, if it does consolidate like this, just be mindful if it stays within a small range like so. Okay, then it's great. It's an opportunity. If it does range like that, then it'll just give you a much better view, because potentially it could create an ascending triangle like what this one has done. Okay, let me just give you the range so you'll know what I'm talking about. As long as it stays, below 100 pip range, that's your consolidation for dollar yen and the euro yen. Yeah, around 100 pips in terms of range. If it does range like that, then that's your cue. Okay, you want to go on standby if it does range like so, because you already have your limits. Then you could be looking at a potential breakout scenario. So I'm just waiting for that to happen again up there. So we're looking at an ascending triangle here, not really a flag. Basically the same scenario over here, the same scenario over here. So it kind of repeats itself. Let me zoom out a little bit. Every time it breaks up higher, you do not want to go against the trend right now. What you want to do is stay within the trend, but look for that short 1 day or half a day consolidation to happen. That's your cue, because taking a note on this one, since the beginning of June, the progress from that below 130 to the upside right now, Every time it wants to have a breakout, it actually consolidates a little bit, and that's your cue. If it consolidates in a range that's less than 100 pips, that's your cue to be on standby, and you want to wait for a breakout to happen before you execute your trades. Okay, so we got requests for gold. Yes, dollar yen. We took a look at dollar yen, euro yen, sterling yen. They take profit from my long position. Yeah. Okay. Okay. US 100, pound USD, euro USD multi-time frame analysis. Okay, we'll take a look at that. Sterling. Okay, sterling. I think we take a look at sterling. So we did take a look at sterling. We did compare it to multiple time frame. Just be a little bit mindful with sterling. I don't like the whole outlook right now. It's above the Ichimoku cloud and stuff like that. Momentum is turning up. But what I'm sensing here is not really sensing. But if you take a look at the whole patterns that's been going on, the past week, it's actually flat, pivoting at 1.25. But it doesn't just stop at 1.25. It might exceed a little bit. Okay. Pound daily going for a short. Stochastics below 80. I don't like it because it's still above 1.25. Again, the key level is 1.25. As long as it's very close to 1.25, I actually have a lot of uncertainty going on with the pound USD right now. I'm good. How are you? Requesting New Zealand USD and sterling yen. We took a look at sterling yen already. Show me my stochastic settings. Okay. Stochastic settings is 1455. Percent K 14, percent K smoothing 5, percent D 5. Okay. So my stochastics is 1455. Oh, someone answered that. Okay, thanks, Albert. Okay, Euro USD. We haven't taken a look at Euro USD. Okay, Euro USD, Euro USD. Okay, how about we go gold and then we'll spend our time with the currencies. Okay, so let me go through gold because there was a request for gold. Now, gold, I'll be honest with you. If you take a look at the whole pattern, it's like that 1840, 1850. It's very similar to 1.25 on the pound, right? It just gets stuck there. Doesn't really want to go down. Doesn't really have the momentum to go up. I think a lot of focus are moving away from gold. Really hard for gold to push up higher. One of the few reasons is that the dollar is stronger, obviously, and you know how hawkish the FOMC is. That you know the cost of, well, technically you don't get the cost, but you know if you are a bullion holder, then yeah, there's going to be a lot more cost involved if the interest rate goes up. So logic tells you that this one should go down, right? But this one doesn't want to go down. This is considered safe haven and risk assets as well, but it's not really time for anything. If you take a look at the yen, we don't have any safe haven demands. Obviously, yen was smashed to smithereens. Gold is just flat at 1840, 1850. Now, how do we trade this intraday? You can trade this intraday, but let me just remind you, it's actually going to get really slow. It's going to get really choppy, and I'm zooming out right now. If you want to have, if you're okay with the market, you know, tipping over by, you know, like $15 to the downside, then yeah, you potentially, this could be great. But expect more of a choppy sideways moving condition. Taking a look at this, the Ichimoku cloud here is actually starting to go flat, and it's actually very, very thin. I'm actually going to zoom in a little bit. So good for those that want to know more about Ichimoku. If you see the Ichimoku cloud that's flat like this, Senko B being flat, and then Senko A is just, you know, in a small range like this one, it's just a dollar range. What we are expecting to see is that gold could just be trading like this and really try to hang around that 1850 level. So this is the most likely scenario to happen with gold. I don't think it's ideal for you to go short right now. We just don't have anything that says, okay, time to go short. We don't really have anything that says, okay, time to go long either. And fundamentally, going long gold right now is not a good case scenario. So yeah, just be mindful on this one. Unless we do have issues like, for example, we've got the I believe we've got the GDP numbers, right, from Japan, for example, and also, do we have UK GDP number as well? No, actually, it's more Japan stuff this week. That's why we have that comments coming out from Bank of Japan and stuff like that. But what I'm trying to say is this: I don't think there's gonna be anything that could impact gold in a sudden spike, unless some news like, okay, the US GDP shrunk by 0.5% or 1% month to month and stuff like that. That's going to trigger that. But until that happens, I don't think we have anything from a fundamental perspective that could create a spike in gold. Now, if you take a look at this one, sure, you could be trading on a small time frame. It's choppy. I'm just going to zoom out and you guys can see what's going on here. I've got 1840 to 1850. That's my blue zone there. That's basically where, if it goes into that range, expect more of a choppy trading movement. That's where we are right now. So expect that to happen. If you're trading on the 15-minute time frame, if you plan to go short right now, again, let me just remind you, if you do want to go short right now, where do you want to have your stop loss? Because ideally, everyone's going to be looking at, oh yeah, you know what, this is my stop loss here. Okay, and then I could be targeting 1840. Well, that's not realistic, okay? I think what's realistic is that we could be targeting 1845. I think that's realistic. You want to go 1842, that's okay. But if you do want to go short, make sure your stop losses at least it's located at 1852, or push it up higher to 1855. Okay, risk reward ratio is still going to be about 1-to-1, but again, because it's between 1840 and 1850, I just don't like it. That's a higher probability this is actually going to get choppy for gold. Okay. I open a short swing position basing it on FIB daily. Where should I put my stop loss on? Okay, noted. What about going long on dollar Canadian? I am okay going long dollar Canadian, but I just don't have that confidence yet. One of the few key reasons is this: we are close to that 1.25 key level. If it goes down, and let's say it bounces off that 1.25 at least for about 2 days, then yeah, you could go long on the dollar Canadian. You could pick it up from the hourly time frame. If it bounces off 1.2525, 1.25, then yeah. It's just that I'm not seeing an oversold condition yet on the daily time frame. Let me check on the 4-hourly time frame. We might soon, but the overall tone is that this is technically still a downtrend. And then if you go into the hourly time frame, we are losing momentum. So we are losing gas right now on that push to the downside. If you take a look at the drop in dollar Canadian, it drops, goes flat for a little bit, and then it drops down. What we're looking at is this: we are dropping down really quickly, and then we're slowing down a little bit closer to 1.2525. Okay, so as I said, this was discussed earlier just now. Your key support level for dollar Canadian is 1.25 to 1.2525. Take a look at this hourly, for example. If the stochastics goes down and do so, and price is still around 1.2525, then yeah, you know what? There's a potential trade scenario where you could only risk, about 30 pips, and then take that trade up. Okay, so just be mindful. Dollar Canadian, the range is just going to be small. So anything yen right now, the range is going to be huge, right? If you're not comfortable with high volatility, then go for dollar CAD, go for dollar Swiss, dollar yen. Yeah, okay, that's okay. I mean, dollar yen's volatility is still manageable. Sterling yen, euro yen, a little bit out there. Okay, Aussie USD, I think that's really manageable. I think a lot of you are probably waiting on the Aussie USD. When is it going to go up? Because we got that 50 basis points hike and stuff like that. That's where I'm actually a little bit worried with the dollar Canadian here. If it does bounces off this support level, then I'm okay. But right now, I don't think it's too early to jump in long on dollar Canadian. So with that said, I want to talk about the Aussie USD. Now, let me zoom out a little bit on the Aussie USD. I'll show you the daily. Okay, we don't need this. Okay, we got 1 pip, and we got this resistance going from 73 cents to 74 cents. That is still in play. If you do have a long position, just be mindful of that one. Support is at 71.50. If it does break below 71.50 on the daily, then cut off your longs, because that'll become a high risk trade. But right now, if we are taking a look at this one, this is hovering between 78.6% to 100% on the fib. Now, in terms of stochastics, not in terms of Ichimoku Cloud, I was monitoring this one spike here. That was when the RBA announced the rate hike. That was yesterday, right? I was waiting for it to close above the Ichimoku Cloud, but it failed to close above the Ichimoku Cloud. Right now, the Ichimoku Cloud is really, really thin. So today, if it does close above 72 cents, then we could see that progress towards 73 cents and potentially 74. But I just want this to come back and retest 73 cents. Be more than happy with that one there. But where that 127.2 is on the daily is very close to 74 cents. Okay, so what we're looking at here for the Aussie USD right now is still, I prefer to go long on a close above 72, having a stop loss below 71.50, and in terms of target, go for 73. The risk reward ratio, it's about 1.5. So max about 60 pips risks that you have. Potential gain around 91. And if you go for that 74, then it changes the whole story. You are going to be looking around 180. That's double the range there. Okay, so I'm still on cam long Aussie USD. Just a disclaimer, I do have a position in Aussie USD. In terms of stop loss placement, I have below 71.50, and to me 71.50 is a key support level for the Aussie USD. If it breaks below 71.50 on the daily, then I want to pull out on all long position on the Aussie USD, whether it's profitable yet or it's not profitable yet. Because if it closes below 71.50, then it'll become a high risk trade. There's just so much risk with the Aussie USD if it does close below 71.50 on the daily. Okay, now on the Aussie yen, the resistance and the target was at 96. This one has gone beyond 96. This on the early time frame. But again, you are going to be wanting to see a slight correction. Right now, we do have a cap around 97. Okay, but let me zoom out a little bit. Give you a little bit more perspective in terms of how far back are we looking at. We are looking at about 7 years high as well on the Aussie yen. So very similar situation with the euro yen. So do you guys get it now? The sterling yen was the weak one out there. The Aussie yen and the euro yen is able to push to that 7 years high. The dollar yen is able to push to that 20 years high. Okay, so Aussie yen, Euro yen, there's momentum going on here. We got 97s on the next step here. Beyond 97, it's actually a jump up about 300 pips. It just jumps up to 100 yen. Okay, beyond the 100 yen, it'll just jump up to 103, 104 yen. So huge potential here for the Aussie yen. You just need to be patient with the Aussie yen right now. In terms of FIB that you are planning to use, I believe you're not able to use the daily one. Oh yeah, you can still use it up to 98, but that's pretty much it. But the weekly one it's this one here. That's still gonna give you about 98 as well. So doesn't matter whichever one it is. We're looking at 97 to 98 as a potential key resistance. If you still do have a long position in the Aussie yen, same scenario with the dollar yen. I would pretty much lock stuff at around 95.50 to 96. So yeah, assuming that you have a long position, if you are able to move your stop losses to lock in some profit between 95.50 to 96, that's where you want it to be. Let the trade run. That's kind of all you can do. Wow. Okay, so that's all you can do on the yen crosses at this point in time. Unless it consolidates, creates a small range, then you can plan your breakout. But this is more of a trending trade. It's really hard to jump in on a market like this because you miss that breakout, and that's it. You kind of miss your entry level. If you want to jump in right now, do consider the risk. Okay, if you're going in long right now, if your stop losses at around 95.50, you're looking at around 126 pips as potential risk to the downside. And if you go for 98, that's going to give you about 1-to-1 risk to reward ratio. So decide if this is great. I much prefer for this one to just bounce off 96.50. Doesn't close below 96, and then we could have a smaller stop loss that we could use. It's still going to be about 50 pips, so be mindful of this one. Okay, so I believe that's all the yens. And then we got requests for equities. Yeah, so yeah, Miss Mary's looking at the same thing. Is it possible for this one to hit 98? I think the possibility is there. Whether we're going to achieve that within one day, I don't know. It might consolidate a little bit around 96.50 and 97, but I think it'll hit 97 first, and then it'll start to consolidate. Okay, so it might go up to 97, consolidate, and then potentially go up higher towards 98. So I'm not for countering anything yen related at this point in time. Okay, so we got long dollar CAD. Okay, I think we have time enough to take a look at the equity market. I believe equity futures was a little bit low, but just to make sure, it's bouncing off support again. If you take a look at the equity market, this is adjusted. We have support coming in at around 32,600 to the downside. Key level to the upside still at 33,250, capped by about 33,300. We are right now around the pivot area for this one between 32,900 to 33,000. What should we do? If this one goes down a little bit more, that'll be ideal. I believe the market is opening up soon. Yeah, let's bring up the pivots for this one. Pivots. Okay, so yeah, we are still right around pivot. Yeah, key levels are right around the same for the US 30. I think the US market is kicking off soon. Next hour, it's gonna kick off. So we don't have a lot of time. But if it bounces up right now it has actually tested Ichimoku Cloud as a potential support here. I mean, it kind of fills in the criteria that this one has touched the support zone for the US 30. In terms of correction, I believe we are about 38.2, yeah? Yeah, right around 38.2. So consideration for the US 30 is that see, that's the thing with the US dollar strength. Are we going to be looking at dollar strength yet or not? That's the thing. Right now, if you take a look at this one, if it closes back up above 33,050, above 23.6%, and we could potentially track higher towards that 61.8, 78.6. I'm not expecting an extension yet because if you take a look at this one, between 61.8 and 78.6, take it back, that's going to give you that previous resistance area on the US 30. So I'm expecting more of a retracement going on. I'm not expecting a range breakout to happen on the US 30, at least not today. I don't think we have any high impact news coming out today. Do we have one on Friday? There's something on Friday, I believe. What's on Friday? Yeah, we got the CPI numbers on Friday. That could probably be the trigger for the equity market this week. I'm expecting more of a sideways market condition to happen, to go on until that CPI number comes out on Friday. Year on year CPI number is expected to come in. Year-on-year inflation number at 8.3%, the same as the previous month at 8.3%. That's the consensus that we have right now. Okay. Again, the inflation number could creep up, or it might stay the same. We don't know what the market reaction is, but what I'm looking at is this: if inflation is above 8% and maintain a position above 8%. This month on that CPI numbers, then we could potentially see a weaker US dollar. But if it does stay above the 8% level, that's where I think the market could, if it slips below 8%, we could see more of the risk assets going up. If it stays close to 8.3%, for example, 8.2% or 8.4%, if it prints 8.4%, then likely the stock market is likely going to just slide down. It's kind of, the initial market reaction for the CPI numbers. Okay, Nasdaq 100, I believe we're also range bound. Yeah, we still have that resistance here. I'm not expecting anything bullish as of yet. We are expecting more of a range bound market condition to continue with market being capped around 12.8 to 12.9. Okay, so you can see here there's resistance up there. That's the salmon colored zone. That's where your resistance are right now. Intraday wise, 12,700 and then 12,800. I would say 12,800 is a little bit more realistic, 100 points to the upside, and then we could see it might slow down a little bit. We just don't have any high impact news data coming out from the US. Other than that, I believe futures are indicating, let me just read my notes. I think tech sectors are not looking that great right now from the futures, but that could be one of the main drivers on the Nasdaq. We might see a weaker Nasdaq compared to the US 30, but other than that, nothing much. In terms of VIX, we are stable, just around 24, 25, nothing major on the VIX itself. Okay. Wow. Right, we have time for Bitcoin. I want to talk a little bit about Bitcoin. I don't think we managed to talk about Bitcoin the other time. Let me bring it up here. It is a question. If price stops around 61.8 to 78.6, the potential of a bounce is higher, more than the other ratio. Correct. To me, 78.6. If price touches 78.6%, there's a lot more risk involved. Because 78.6% is kind of the last barrier. It's no longer a normal retracement in the market, right? For example, let me just bring back the US 30 here. Okay, so this is still moving, by the way. This one could go down lower and we need to adjust it. But in any case, the 61.8 and 78.6% are no longer considered to be a normal correction level. If it, for example, like what it is right now, I was looking at this as 38.2, right? So this is considered normal. Okay, market could slide all the way down to this low. Okay, and I would still consider that normal. It could push down by another 160 points to the downside. I would still consider it normal. The thing is this: if it does touches the 78.6%, it's no longer a normal retracement in the market. It's beyond normal. Anything that pushes towards that 78.6% level has a potential of a trend ending. There's a potential for a trend ending. But considering the whole outlook on this one, it's more of a sideways market condition, right? Therefore, in a sideways market condition like the pound USD, the gold, XAU USD, the US 30, Nasdaq, what else was there? No, pound USD is definitely there. I'll talk about it. Okay. If a market is moving in a sideways market condition, then it's very common to see 61.8%, then 78.6, 61.8, 78.6, back and forth. We're not creating an extension, because by creating an extension, it means a breakout that happens in the market. So if you see a retracement followed by a retracement, that's your cue. You need to be careful because the range is getting smaller. The market is no longer able to create a new momentum to break a new extension. Okay, so it gets stuck like that. Retracement, and then every time it creates a retracement, it gets smaller and smaller. What it's forming is it's just forming a triangle. Okay, so if you see a retracement followed by a retracement, that's your cue. The market is going into a sideways market condition. When it goes into a sideways market condition, it's typical. Sorry, it's not typical. My strategy for that is that I step aside, okay, and I wait for that range to potentially create a breakout. That's where I want to jump in again. But if it's trading in a range bound sideways market condition, it just doesn't fit my trading style. But everyone is trading differently. I'm more of a swing trader myself, so I like that breakout. I like a trending market. I don't like a sideways or range bound market. Doesn't mean that I'm not excited for it, because to me, a sideways or range bound market condition is a good time to look at a market, because you can position yourself well. You know where your stop losses are. You kind of potentially know your target levels. It's actually ideal to be waiting for an entry during a range bound market condition or a sideways market condition. So pound USD, for example, or gold, the longer it stays there, the better it is for me, because the longer it stays there, the more established the range is going to be. Okay, so yeah, before we wrap things up, I want to talk about Bitcoin. I was waiting for something in the month of May, right? And that something was a close below 30,000. If it closes below 30,000, then we are in trouble. We didn't see that happen, which is great, but it just creates a new month with a lot of uncertainty. So 30,000 is still in play. Right now it's being tested again. This is a monthly view of the Bitcoin. If it bounces off and stay above 30,000, I think it's good news. Last month was a close call. I don't know what's going to happen in this month, but in terms of long-term positioning on Bitcoin, I'm actually staying on the sideline for a little bit. I don't think it's stable yet to say, yeah, jump back in and stuff like that. We got a lot of those altcoins that's being relisted as something else, right? You guys know what I'm talking about. I'm just not gonna talk about it here, but you guys know what I'm talking about if you are into crypto. there's a lot of uncertainty going on in the market itself right now. So stuff like this, I believe Ethereum wasn't even doing well as well. Ethereum is actually doing pretty bad lately, but you can see on this one, if you measure the extension, we are past 127.2. We could potentially be looking at 161.8. That's closer to 0.0560. Okay, so cryptos, we're not really in the clear yet. It's not stable as of yet because the key support that it's just huge, right? I mean, 30,000 is just a huge number for Bitcoin there. If it's able to stay above 30,000 for a good 2 months, then yeah, a lot of other traders are probably going to look at it and say, you know what, it manages to stay above 30,000. There's still demand for it. Yeah, you know what, that's when it could potentially create a new interest. But right now, at this point in time, with the whole inflation going on, with the whole central bank hiking rates here and there, I think there's a lot of attention that's being driven to the fiat currencies compared to the cryptocurrencies. Okay. Right. So yeah, let me just remind you, we've got the ECB tomorrow. Right? We've got the ECB tomorrow. And then the CPI numbers coming out on Friday. Today might be a quiet day, but tomorrow and Friday definitely going to be a little bit more of a volatile day for trading. Okay, that's our time for tonight. Thanks for joining in, and I'll see you soon next week. If you have any requests, do type it in the comments. If you want next week's session to be more of an educational content, type it into the comments, then we can adjust it and see what we can do. All right, other than that, good luck with it.